We are living in changing times. If you love it or you hate it, if you accept it or you want to put your head in the sand, none of that matters. The cat is out of the bag, the milk has been spilt, and now we are going to be dealing with the ramifications of the chaos that we have all experienced in the last couple of weeks. This is not a political statement. This is not leaning one side or the other. This is me standing on the edge of the coin. And on one side, I see chaos and change. And on the other side, I see reaction and action. Today, we're going to talk about how the reemergence of nationalism in Canada, in the EU, and the increase in defense spending and the increase in government spending is going to impact you and your portfolio in the coming years. We have an engaging conversation that you don't hear every day. So without further ado, let's get right into this thorny and tricky topic.
All right. Welcome, everybody, to the latest edition of Burn Your Boats Wealth. I am Clark. I am here with my favorite co-host, David Shaw. David, before we jump into today's topic, which I'm excited to talk about, we're always asking for feedback and reviews and things like that. We just wanted to share a review to our listeners because we're always trying to come up with good ways to impact with value and things like that. So, David, give the listeners a little bit of a taste of what we're hearing.
You know, it's really cool. We start off the show every week, Clark, normally, say, hey, listen, leave us a review.
Right.
Rate us and whatnot, or please subscribe to the show. And so what we're going to start off today's show, and we're going to thank people for the reviews that they've given and give you guys an idea of some of them. Hey, guys, I really enjoy listening to your show every week. It's my favorite real estate podcast. Episode 65 really resonated with me, and I appreciate your honest takes. It's good to hear that the bumps I experience are normal, and this really helps me stay the course and not give up. Your podcast has changed the way I look at investing, and I thank you for sharing your insights. That's from Louis.
Louis, I've said it a million times, entrepreneurship is lonely, it just is. And I think sometimes we think that we're all going through these struggles and it's only happening to us because all you see on social media is everyone's highlight reel where there's nothing that ever goes wrong, right? We're all going through these psychological bullets.
That's right, Clark. That's just a sample of some of our reviews that people have very, very kindly made. And the point of this is that we really, 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 we cherish these reviews because it gives us some feedback. It gives us some momentum behind making the very next episode. We're like, okay, people like it. Let's move on. So if you have any thoughts about today's show, just get on there. By the way, on Spotify, you can't leave a review. So, we're reading reviews from Apple Podcasts. So if you're on Apple, please just, scroll down and leave us a review. Clark, what's going on in your world? You've been away last week at a big mastermind group. How was it? It's good to see your face again, and let me know what your big takeaway was.
Yeah, we did. The last episode we did, I was in the Dominican Republic, and luckily the Wi-Fi was good enough for us to be able to accomplish that episode. But Dave, it's been a couple weeks, so it's good to see you. We definitely spent 8 days out in Dominican Republic. Went out there with my girlfriend. Spent 4 or 5 days with like 100+ entrepreneurs in a room. It was a great experience. A lot of energy in the room. It's all about the connections at the end of the day. Like you can't replace those connections by getting on a webinar, but you physically, sometimes you just have to get on a plane, fly to a location, preferably one with a beach, and being able to connect with people. And that's kind of exactly what I did. And it gives you inspiration and motivation to want to go out and do things. Got a chance to sightsee, practice my Spanish a little bit. And also too, another thing that I had, David, that I've been working on for about four years now, embarrassingly, is that a new build that we had built. We refinanced part of the project now to stabilize it, and it only took 3 months. So whenever anyone says, David, oh, I'm just going to buy it and, fix it up and burr it, it was the flavor of the day. It took me 3 months to quote unquote burr it once we started. So a lot of lessons learned there, but glad that it's kind of done. What about you? What have you been up to, man? What's new in your world?
Well, there's a lot going on in the world.
There
And so
is.
that's what's
I've
new in
heard.
the world right now, Clark. Most of you listening to this podcast will have suffered pretty decent sized losses in your retirement accounts, in your stock portfolios, and in your investments over the last couple of weeks. And I think it's very important that we spend a minute talking about it because it's great here to sit here and powwow and all these other podcasts to powwow and things are going great. It's so easy. So yeah, everything's easy. It's great. We're all making money. But there's times when it's not so easy. And I think that podcasts like this become almost more important in the darker of days. So Clark, we were just shooting shit before we started off here. You're telling me about your brother, licking his wounds and his retirement counts down a chunk. Tell me what that conversation looked like.
Yeah, well, he had a bunch of NVIDIA and he was down like 40 or 45 grand. And, it was unrealized. So it's not like he had sold it to realize the losses yet. But that stings. When you lose 40 or 45 grand, that was something that he was hurting. And then guess what it also is right now, David? It's tax season. So now you get to write a check to the IRS. Your stock portfolio is down 25 to 30%. And I'm sure a lot of folks listening to this can resonate well with that kind of concept and that story. And it was tough. It's tough for him to take right now.
You only pay taxes when you realize gains or you realize losses. So
Right.
One way or the other, he's writing off the tax or he's paying tax one way or the other. But there's a lot going on geopolitically, Clark, and I thought that we would touch on that today. And I will say at the start of this, we're not economists, we're not politicians, and we're not financial advisors, but still, we're observers of what's going on in the world today. And these tariffs, the U.S. retreat from Ukraine and what happened a couple of weeks ago, the White House, and these things are reverberating around the world. They're not just nonsense on the news. And that's why your brother lost his 40 grand last week. And I don't know how much Jensen Huang lost, the CEO of NVIDIA. I would imagine he lost somewhere in the hundreds of billions.
Yeah.
I know myself, I have some pretty decent sized unrealized losses that are hurting. And I'm not going to lie, they're hurting, but I'm long. So I take a long view to retirement accounts and things like that. But I thought we'd talk for a moment about what these actions result in. Remember, for every action, there's an equal but opposite reaction, right? And what we're going to do is we're going to talk about, I'm Irish. And so I listen to European economists. I listen to European views on things. And I have a more, generally in my day-to-day consumption of news and whatnot, I have a fairly globalist approach to where I read my news and where I get my information from. And so today I'd kind of like to talk about what these reactions to these U.S. actions look like, Clark. And so, with that being said, you could run through like what have you seen from a U.S. observer? And I know you're deep in real estate all the time, but what have you seen in the last week or two that geopolitically, globally, and economically that are kind of grinding your gears?
So I think it's interesting because as an American, right, we tend to have this viewpoint that's fairly narrow, right? You're really like only concerned with American politics and what's happening to the American stock market. And, over the past 4 years, you haven't really seen a lot of poking the bear, right? Biden wasn't doing a lot of poking the bear, and he wasn't probably off quite as many countries. And so now it's interesting because now as Trump has got into office and he's starting to make a lot of waves with not only potentially some enemies, but also with some of our foes, right? And so, with the EU and with some different kind of buddies, Canada, Mexico, right, with the tariffs. So I think that as the American that's not super well knowledgeable about global politics, global trade, I'm glad, David, that we have you as kind of our resident expert on global trading to help provide some insight. So I wanted to ask you some questions today that I think as to why, as an American that was born here, that grew up here, that mainly focuses on, our American economy and how it impacts us, does it impact us when Trump is out there saying, hey, there's going to be tariffs of X% on Canada or China or whatever that looks like, or the fact that we're talking about the war with Ukraine and Russia and what the repercussions are? So, David, where's a good place to start as an American into the global politicalization of things? Where should we start? And what's a good topic?
Right. So thanks, Clark, because I do like to ask what the other side of the coin is doing.
Right.
And so right now, for instance, let's just take all of these tariffs on Canada, right? Where we're putting tariffs on and then taking them off the next day and putting them on, where Canadians have put tariffs on us and left them on. And said, well, you guys are over your little tantrum over there. But if you go into a liquor store anywhere in Canada right now, there's no US booze. If you go into a Canadian store right now, look for US agriculture products. They're way more expensive, or they're not on the shelves at all. And so if you talk to a Canadian right now, they just elected a new Prime Minister, Mark Carney. He's a former head of the Bank of England. He's Canadian. And listen to what he's saying. Nobody in Canadian history has done more to unify Canadian nationalism before, other than our current president. So nationalism on a global scale is really getting stoked up. So if I take my finger and I stick it in your eye, right, you're going to have a reaction to that. And so if the Canadians, they're a proud people, but they're really unifying around their Canadian and their national identity. The same is also true in Europe, where I spend some of my time each year. And I think it's really important that we talk about what's happening to Europe, to the EU, to Germany, to military spending, because that is going to be the takeaway from this episode today is, there's always another side of the coin. Where are the investment opportunities in this conversation? With that being said, nationalism within, let's say, individual countries, or what's happening equally in the EU bloc. I got some real interesting thoughts on that at the moment, Clark.
So the EU is obviously they're our buddies, they're our allies. Talk to us a little bit about, in terms of as an American investor, right? And we're seeing the relationships going on, the relations with the EU. How does it impact the American investor? Why should they care? So give us kind of a quick summary of what's going on, David, over there, and then the consequence, the potential, because you don't have a crystal ball, right? But what is the potential repercussions of what's going on with that?
Well, the United States has, since the Second World War, the United States has pretty much underwritten global peace, global trade, global rules, and there hasn't been, we've just experienced, within reason, the most peaceful time in hundreds of years, of human coexistence. It's been very, very peaceful because of U.S. power and U.S. influence. And because of that, the United States has been a net beneficiary in terms of trade, in terms of its global reserve currency, in terms of its ability to issue U.S. debt way beyond the capacity of any other country in the world, and it will be purchased. And so there's the real big trigger, let's say, in the EU, is NATO is now not taken for granted, and security cover in the EU is now very much questioned. This isn't a case, in my view, this isn't a case of, we'll wait 4 years until the next administration comes in. This is a little bit like a married couple, and one of them just outrageously cheats on the other. It's like, you can spend 80 years building the trust, Clark.
Yeah.
You can spend 5 minutes tearing that trust down.
Right.
And what is the reaction when that trust goes away? When NATO and the just foregone assumptions of NATO are gone. When we have something like the Ukrainian war that's been, again, underwritten by European and American treasure and blood in some cases. So what happens when Ukraine is sacrificed to what has been historically, let's call Russia not an ally in this scenario.
Right.
What do the Europeans feel? What's happening to the EU? What's happening to the border countries? Poland, the Czech Republic, Hungary, Germany, Finland. What's happening to these countries? How do they feel with the collapse of NATO? And that's a profound investment opportunity, but it's also a profound change in the global world order.
So David, sorry to interrupt. So provide some context. So you gave the analogy of blatantly getting divorced after 80 years, right, where you can break the trust. So tell our listeners about EU and our relationship with them and what Trump has kind of threatened that he would do that potentially could break that trust.
Right. The bottom line is, since the Second World War, EU and the United States, EU imports an awful lot of goods and services from the United States, and EU exports mostly goods. Okay, so when we're told that the trading alliance is skewed one way or the other, it doesn't really work like that when you take the full scale of that data into account. We're left with the elephant in the room when you're talking about the EU. The EU is basically Germany, France, and Italy, and formerly the UK, that came together so there wouldn't be any more wars to end that geopolitical, power struggle in the center of Europe. There's 460 million people in the EU. That's a big block of economies. That's a big block of people. So after the Second World War, Germany has taken on very much a pacifist approach, and that pacifist approach has been underwritten by the US and the US military. And so in doing so, Germany now sees the issue in Ukraine as a mortal threat in the real world. So Germany is now shifting from being a military lightweight completely to potentially embracing a much more dominant role in European security. That is having profound effects. Just last week, the new German Prime Minister announced 1 trillion euros investment in military hardware and rearming the German military. Right? Think about that. $1 trillion they've just announced. And so that's going to have impacts in the world.
So tell us then, so Germany is not liking where the Ukrainian, Russian, wherever it's heading. So again, provide some context as to why Germany is taking it so hard, whereas some of the other countries in the EU are not raising $1 trillion to put into their military.
You got to understand what Ukraine is to the EU. Ukraine is a buffer. Ukraine and Belarus are independent countries that are a buffer between a historically expansionist Russia and the European Union and Germany and the eastern states. And so if that buffer is no longer there, there's very, very little line left between, the horrors of the Second World War, if you will. Is the EU see Russia right up on their border as being a much more threatening environment. And likewise, the Russians see the EU on their border as being threatening. And it just provides a much more unstable environment. If Ukraine is sacrificed to Russia, you've got a much more unstable environment. There's much more likelihood of skirmishes and things like that that could escalate very, very quickly into a very serious war. So the Germans do not want to see Russian influence right up on their border. And that is felt very, very plainly. If you go to Milan right now, you go to Dusseldorf right now, you go to Paris right now, they feel this. This isn't just some notional thing. This is Russia's getting closer to us. We don't like it. America had our back. Now she doesn't. So what are we going to do about it? And the reaction in the last couple of weeks has been absolutely dramatic.
So basically, you're saying is that while that noisy neighbor that you don't like that lived 3 blocks away, but for the most part, they were far enough away for you not to really have to deal with them. Now, the potential is they could be moving in next door. And if they move in next door, you're going to hear the loud music, you're going to see the cars coming and going, and that could become a bigger influence and a bigger threat. Is essentially they're just moving closer to you. They're just a much closer neighbor now. Is that what I'm hearing?
Yeah, that's right. That's right. There's a buffer zone really between Russia and the EU in general right now, and that buffer zone is being challenged, right?
And then if they'll take Ukraine, then why not take a piece and then just start inching over and just expanding and expanding?
Why not take the Baltic states? Why not take Latvia, Lithuania, Estonia? Why not take Poland? Why not take Moldova? Why not take these other places? And that's the real question. So the stark thing and the investment opportunity, I'm going to keep on saying that, is that the Germans have a concept in their economy since the Second World War called the debt brake. The Germans have a very, very stringent fiscal policy. They've got very, very low government debt. They're very, very low public debt. So with such a low public debt, the Germans have a lot of runway in terms of spending and borrowing. Okay. And with the rest of the EU having its own EU central bank right now, there's the conversation now is about Germany issuing its own debt, but very, very quickly, the other countries in Europe are coalescing around a concept about a European army, that the EU issuing its own EU bonds to fund defense. So that's going to have a profound impact in spending in the global bond markets. And it's going to have a profound impact for investors. Like, where's all this money going? What do you do with it?
Right.
Because the potential for Germany to fill this security vacuum as the US kind of withdraws from Europe is really going to impact German arms manufacturers, European arms manufacturers, French, Dutch, British companies that provide, because they're not going to spend their money on US arms. Remember, this is a nationalistic thing as well. So they're not going to go to Lockheed Martin and Northrop Grumman for their materials because they don't trust the US side of the equation anymore. So the US or the European arms companies are, in the last couple of weeks, just gone absolutely bonkers. Their stock prices are just rising double digits every single day at the moment.
So provide some context. And here's what I want to ask is that I want to give an example is like, we're in Florida, right? And when hurricanes hit Florida, it's a big freaking deal to us, right? They're coming, we're putting sandbags out, we're running around, everyone's, running around like a chicken with their head cut off, right? Then you have like the California wildfires, right? And I remember when I was watching those on the news, David, I'm like, God, it's horrible, but like, am I losing sleep over the California wildfires if I don't have a family or friends that are losing their house? Probably not. I feel awful for them, but it's not like, selfishly, it's not directly impacting me. Just like when I talk to my friends that, like I talked to friends where I went to Oklahoma State, right? And like, oh, did the hurricanes hit you? There's like, oh, did it happen? Did it not? Like they didn't, yeah, they cared, but they didn't, right? So for someone listening to this and saying, okay, Germany is ramping up, right? The EU may not be buying, military parts and things like that from Lockheed Martin, an American company. How is this bridge the gap for me so that I can, is there a relation to where it's physically like a hurricane hitting Florida and I live in Florida? Or is it still a ways off in terms of the repercussions or opportunities for an American investor?
Right. You're going about your day. I love this. You're going about your day right now. And you're like, you might like Trump's actions or dislike them. This is not political. I'm just talking about what's going on in the world. Right.
Right.
So you might like it. You might say, yeah, it's a little bit of pain for a minute, and you're looking at your American viewpoint, and you should go about your day and you should go focusing on you because nobody's going to pay your bills.
Right.
Nobody's going to come in and build your business. Nobody's going to take care of your kids. That's your economy. We're talking about the global stuff here. Yeah. But if you live in Germany right now, there's a word going around called Zeitenwende, right? And Zeitenwende means a change in times, an epoch, something that has now changed and will never go back again. So while the EU and the world order has been stable for 80 years, the Germans are using the word Zeitenwende, which indicates to them that everything's changed. We're now marching forward with a completely new set of rules. And we don't like when Germany rearms. We don't like when nationalism is stoked around the world. And so, because that one day could come back to bite you in the ass. I'm not saying how it will or when it will. I'm just saying it could do. And it would probably not be in terms of something happening to you in your house, but it will probably be bond yields. It will probably be interest rates. It will probably be your friend down the road losing their job. It probably be higher prices in the store. It'll probably be these things. So it's not like you're in quote unquote danger, but there's a lot of things on the table right now. That was a great question.
I'm enjoying this conversation because I'm very much the listener in this role, because you have such a vast knowledge of more of global politics just from your background. Can you make the connection between Germany being scared, ramping up, and higher interest rates, or me going to the store to spend another $2 on a dozen eggs? I realize it may not be directly related, but can you kind of bridge the gap between how they are connected?
All right. So just think about this for a minute. You've got rising nationalism, right? You've got a coalescing EU. You know, nobody has done more to bring the EU nations together. There's actually talk at the moment, and it's more serious talk than one might imagine, of the UK rejoining the EU right now. Okay. At the highest levels of government, there's talk about putting another referendum in front of the British in the next, year or so, and bring Britain back into the EU to create a second. You've got the United States. It's the only country on earth capable of providing global stability and a global reserve currency that people trust. The key word there is trust.
Right.
The Chinese are not going to issue a reserve currency anytime soon that the rest of the world buy into, right? The United States has spent 80 years building up that trust. The greenback is the most trusted currency on the planet. But as all of these things go down, and this other nationalist rhetoric stokes up in Canada, in Mexico, are people going to still want to buy American bonds? Because the United States needs to issue trillions of dollars of bonds every year. So there's always a massive supply of U.S. bonds, U.S. treasuries. Who buys them? Countries buy them that trade with the United States, right? That's how they take their dollars and how they spend their dollars, right? They collect dollars and they invest in U.S. treasuries. In the environment where people are trading less and they have a nationalistic distaste of buying U.S. bonds, well, guess what? There is conversations in the EU at the moment about challenging the U.S. global reserve currency. And as Germany are issuing $1 trillion worth of German bonds, right?
Okay.
You're going to see interest rates rise in the United States, not fall, because the global capital is going to be heading towards German bonds, EU bonds, and so on and so forth, not US bonds. And so the demand for US bonds will go down. And so the prices of US bonds are going to have to go higher to attract capital. And if the prices go higher, that's going to impact you and your neighbor who wants to buy their first house when interest rates are 7 or 8%.
So what I'm hearing then is that the competition versus the U.S. bonds is going to be much higher through German bonds. And that means that if there's less people investing in the United States, then the interest rates could potentially go up, prices go up at the grocery store, which they're already sky high. And then also too, we all know about, we bang on about real estate and interest rates on, every other episode. So the fact is that if interest rates don't drop, it's still going to keep a lot of people on the sidelines. And we're already seeing it, David, where we're starting to see the trend of like the real estate side to where, I don't know about you, but it may be a neutral market, and every market's a little bit different. I'm not, nationally, we can just talk about real estate, but as you get into real estate, you see the sub markets. Our market in Tampa is different than in Wyoming, right? Like they're not the same, but we're starting to see a shift where there's a lot of houses for sale, not a lot of buyers. What does that mean? It's starting to shift into a buyer's market. And if what you're kind of saying is starting to happen, right, then it seems like, are you saying that it may shift to even more of a buyer's market, and we may need to see more things sitting on the market, which means the values are going to drop, which means the value of your real estate portfolio and mine may start to drop some. Is that what I'm hearing?
Yeah. That's basically it. The proof is in the pudding. Last
Yeah.
week and right up until last night, there was a massive sell-off in the stock market. Now, traditionally speaking, a big sell-off in the stock market, where does all that money go? Goes over to the bond market, right? And then when, there's huge demand for bonds, you would expect to see the yield on those bonds go down. That's basically bonds 101. But what we're seeing is that the yield on the German bund, which is usually somewhere in the low 2% because they have no debt, so they're more trusted than the
Right.
US, which is, the yield on their 10-year is 4.2% or so as we speak here. So you're seeing the yield on the German bunds rise right now, right? And so capital is going to make its way over there because there's higher yields and high than normal for German bonds, which are safer. And so as capital makes its way over to an alternate environment, less capital is in the US bond market. And the real proof of that for me last week was the fact that capital didn't necessarily make its way into the US bond market after was a multiple $1 trillion sell-off in the stock markets.
So I'm going to ask you, because it sounds to me like, let's see, interest rates not going down, cost of goods at the supermarket are going to go up. That all sounds like not a lot of good news for all of us Americans. We may shift into a more of a recession type environment.
Well, with a inflation report just this morning that came in at 2.8%. So inflation is down just a little bit. I think that this inflation report doesn't really take into account most of what we're talking about, because what we're talking about is really in the last 4 or 5 weeks. So I don't think the inflation report is really capturing that data just yet. That's not, we are not trying to be political here whatsoever. We're just trying to actually give you actionable steps that maybe you can take. And so the reason we kind of jumped on here today is, I could see this a couple of weeks ago. And so I jumped into this trade. I sold off a bunch of US positions that I had, and I bought, a bunch of, European defense stocks, ETFs. Like, I'll give you an example. So Rheinmetall, it's the biggest defense contractor in Germany, is up 90% in the last 4 weeks, right?
Wow.
I just checked on it before the show. It's up like 7 or 8% today, up 7 or 8% yesterday. You're going to double your money by just simply knowing this. Now, you might say that these stocks are overvalued, like stocks like Rheinmetall are overvalued, but there's $1 trillion coming their way. And that's just the tip of the iceberg. If this continues to go on, there's going to be many trillions of dollars. So look, the defense, the EU defense segment grew by 30% in 2024. Rheinmetall's stocks are up by 90% this year alone, right? So like everybody right now is talking about certain different groups from certain companies. And I'll name a few. And these are not stock tips. These are just big beneficiaries of EU spending, right? So Hensoldt AG, these guys specialize in electronic warfare systems like radars, and its stock is up massively in the last couple of weeks. Renk AG is a producer of military vehicles. Renk, RENK, is ramping up its production. Other European defense stocks are like Italy's Leonardo. Thales in France, their shares jumped 14% in the last couple of weeks, benefiting from increased demand for aerospace and defense systems. You guys would know Britain's BAE Systems. That's up 50% in the last couple of weeks. As the UK aligns with Europe's military spending. And so, I'm not a big stock picker. And so I tend to like to just go into ETF. So I bought a bunch of an ETF, a global defense ETF called SHLD, SHIELD, SHLD. It's just a tech or a ETF. It's going to grab kind of a lot of that stuff. And so there's different ETFs that are like that you can take advantage of. There's European ETFs that are just specialized in the European defense sector that are worth investing in. I bought some European defense ETFs in the last couple of weeks, and they're all up 30 or 40%. The actionable takeaway today is don't pick winners. We always say that, right? But spread your capital out. And if you're looking for ideas as to where growth might be coming in the next year or 2 or 3, you could look to the EU and European stock markets in general, but I think the European defense, spreading your money out across European defense stocks might be a pretty wise thing. But that is not a stock tip, and we are not financial advisors, but it's just what I've been doing. And so you asked at the start of the conversation, what have you been up to? Well, I've been selling a lot of my US positions, not all of them, and I've been moving them over to this position.
I'm glad that you bring that up, and I appreciate you kind of bridging the gap a little bit in terms of how it impacts Americans so that we can feel more like we understand. So my question to you, David, is this all sounds like really interesting stuff that we should probably educate ourselves about, especially with the global politics and what Trump is doing and how he's kind of got the fast finger to make moves quickly and poke the bear, as you referenced. Why is it then, if I went on my Apple podcast scroll thing right now, where I go through all the podcasts I listen to, everything that we've just talked about, I'm not going to see listed anywhere, right? All the big names in politics or in real estate and wealth building and all the different podcasts. Why do you think that when I go through and scroll and I see wealth creation and the market's doing this or the market's doing that, it's up, it's down, it's sideways, but I don't see anything related to what's going on in the EU, what's going on with the tariffs on China? Yeah, maybe they're talking about the specific tariff, but they're not talking about it in a larger sense. Why is no one talking about this, yet it seems so important?
You're listening to the wrong podcasts.
Okay, well, maybe that's it.
There's lots of it out there. Morgan Stanley have a great podcast every day. The Economist magazine have a great podcast every day. I listen to individual European economists. There's an Irish economist I listen to a lot called David McWilliams. He explains complex economic concepts and geopolitical concepts in a very enjoyable and likable way. And so I just happen to have an interest in hearing, what's going on globally, just because that's my background as well.
Right.
I love listening to US real estate podcasts, and I love listening to wealth creation opportunities here in the US. And I normally just stay in that lane and I, politely listen to what's going on. But within the EU, it's been fairly quiet economically for the last 10 years. But that's all about to change. Yeah. It genuinely is about to change. And so that's why we're doing this episode today. So the information's out there, Clark. You just need to maybe broaden your listening habits.
I'm sure that's what it is. It's like you find one podcast you like, and then it recommends 5 more that are very similar, and you kind of get sucked into a bubble of listening to the same type of podcast. There are days, David, when I can't listen to another real estate podcast.
I get that.
Sometimes I need to listen to like a stand-up comedian that doesn't talk about building you better, self-development. I'm like, just let me listen to anything other than that. So I'm guilty. You're right.
Yeah. You want to dig into your true crime series or something like that, just to take a break. No, I get that. Like podcasts in general, when they're specific and they're aligned to a particular idea, they can be hard listening. If it's just the same thing over and over again, and you're like, particularly if you're an expert, you're an expert in real estate by and large. And so, if you're listening to things that are, let's just face it, U.S. real estate right now is in a slump. It's in a big recession, and we'll talk about exactly how big a recession it's in a coming episode. There's lots of that doesn't mean there's not lots of opportunities. Oh my goodness. Right. There's lots of opportunities. You and I both know that we made some very opportunistic moves lately, you and I ourselves. And that's in real estate. We just haven't come on the podcast and kind of announce what they are. And so there is a massive shift going on in the real estate market right now, but a lot of people don't want to hear about it. So a lot of the podcasts are out there, saying, buy, go, or they're just gone quiet. I don't know if you noticed a lot of podcasts are getting quieter. Just in general, they might not be putting out as much information as they normally do. And because it's a quieter time and they don't know what to say. It's easy to thump your chest and tell everyone to go bonkers when it's going bonkers and 90% of the people are acting. But remember, there's 10% of the wolves in the forest, and the wolves are out now. The wolves are woken up, and the wolves are starting to lick their chops and take advantage of what's going on. And so, there are podcasts out there, reading material out there and we will be out there covering where we see opportunity in the coming days and weeks, because we've got a lot to say about that too, Clark.
I'm trying to get on the phone and talk to different brokers and sellers and really have an understanding as to where the water is flowing in that market. So, it's if you're still on the sidelines and you're just like waiting to then go take action down the road once something happens, I think that you heard it here, David, is like you need to be listening and gearing up. And, are there a way to you to get access to cash through like equity lines? So line that up now. Start figuring out, if you're in the real estate side, like start making connections with contractors, right? Start making connections with brokers to say, hey, the next time that you get a deal that fits A, B, and C buy box, please, put me on your short list to reach out first. Because if you wait till you start to hear the blood on the streets, you're going to be too late, because the people that are doing that right now are going to beat you to the punch. They're going to have access to quick cash. They're going to have access to better contractors, all the tools that you need to be able to take advantage of these opportunities. So, I think, David, this has been, I like that we're bringing different types of alternative investments and different ways to think about it. We're not just a real estate podcast, albeit it's easy for us to talk about it because it's what we live and breathe every single day. But there is life outside of real estate, or at least what I've heard. And so I appreciate, David, you kind of giving everyone some insight today into a broader international global feel. I didn't know before this podcast why Germany getting nervous is going to really impact me as an American. And I think it's really, really good for people to understand what's going on over, across the border.
Well, we live in a global economy, right? That's just it. You live in a globalized world, and that's the bottom line. Do you think so or not? The podcast called Burn Your Boat's Wealth. It's not, we don't have real estate written in our podcast.
Right.
The reason it's called that is because we're able to navigate a lot of different topics. So yeah, I've been thinking about this a lot. I've been reading up on this a lot. I've been researching this a lot. And I hope that the listener took away at least one or two actionables from this episode. And with that being said, Clark, let's get out of here.
Let's do it, everyone. Thank you so much for listening. Hope that you learned something new today. I think you did learn something new, and we're going to continue to keep doing that and bringing you really, really great guests. David, with that being said, great job today, my friend. Thanks for all the education for me and hopefully for everyone listening. And David, with that, we'll see you next time.
Remember, leave us a comment. Like and subscribe. Talk to you soon. Bye, Clark.
Well, that is a wrap for today, folks. We hope that this episode really gave you some actionable insights. Because remember, you navigate the world of property investment. It requires more than just luck. You're going to need strategy. You're going to need knowledge. And of course, you're going to need a little dash of courage. And if you enjoyed today's episode, be sure to hit that subscribe button. Leave us a review on any of the podcast platforms that you listen to and YouTube as well. And don't forget to follow us on Instagram and Facebook at Burn Your Boat's Wealth, and leave comments, talk to us about things that you want us to talk about or things you disagree with us on. We appreciate all that type of insight. Your support really fuels our fire to bring you even more valuable content. So we appreciate you. We appreciate the support, and we will see you next time.
You've been listening to the Burn Your Boat's Wealth podcast with Clark Lunt and David Shaw. We would love to hear from you. Please reach out at contact@burnyourboatswealth.com with comments, questions, and if you have a topic you would like Clark and David to discuss on an upcoming episode. We would very much appreciate it if you took the time to rate and review Burn Your Boats on your favorite podcast listening app, and make sure to follow and share on social media. Content in Burn Your Boat's Wealth podcast is for entertainment purposes only and is not legal or financial advice. Please review our legal disclaimer at burnyourboatswealth.com. Thank you and have a great day.